like big picture, we prefer the more consumption-oriented commodities. So the big one being oil. But we're not looking for outsized returns from oil. We just think the oil market's going through that clearing process where high-cost unconventional production in the US is already down 1 million barrels, over 1 million barrels from its peak. We expect capacity to continue to be rationed out of that market, and as that happens, you'll get companies at the lower end of the cost curve, doing better as oil prices sort of recover. I think the big recovery opportunity though is natural gas. It's been in a longer bear market than oil, primarily because in North America, you were drilling, whilst you stopped drilling for dry gas, that peaked some 7 years ago. We continued to drill for oil until about 18 months ago, and you get associated wet gas production from oil production. So it took the collapse in oil price to finally get supply rationing. But now you're getting this acceleration. It's the unconventional gas is the opposite of LNG. I mean, LNG, you sink $30 billion into a terminal, and then you've got an asset that produces as an annuity for 20 or more years. In the case of an unconventional oil well, you drill, costs you roughly $14 million, so that's why lots of small guys can do it. And then your peak flow rate, within 2 years, you'll be down 60%. So you're going to get in oil and gas that sort of decline rate. So decline rates accelerate. We think the underlying decline rate's around 22%. We're down just over 1% year on year. So it gets pretty interesting in 18 months' time because this is gas in the US is so competitive. We're replacing coal for power generation, exporting it to Mexico. We can compete in LNG against the northwest shelf in Australia, and even Russian gas going to Europe. Those two competitors are really using oil-linked, gas prices, and that relationship tends to be 6 to 1. So $60 oil, $10 gas, $2.50 gas in North America. It's a no-brainer to export. So we're expecting a big bull market in gas. It has to recover to the marginal cost of production, which we think is around $4.50.